Hello everyone and welcome to Players FX. In today's video we'll be talking about how we got a nice trade on EU Euro USD, okay, and how we got our entry and exit from start to finish. Without much ado, let's dig in. Okay, here we have a markup is sent to the Telegram channel. This is the entry, the markup before our entry, and this is the markup after our entry. Now moving on to the charts. Look what we have here. So we have a bullish run with a sort of retracement and consolidation and a manipulation into our entry, and we had this. We got stopped out at about break even. Still a good entry. We had a risk to reward of 1 to 6. Now let's see how we went about this. So breaking this down, we have basically in a bullish run we should have a higher high, a higher low, okay, a higher high, a higher low. Okay, so the point is we are in a bullish run. We need buys, we look for buys. Taking this whole schematic into play, we're in a bullish run, looking at Euro USD from a very higher time frame. Okay, this was basically a retracement of this. This is where market structure understanding really comes into play. For someone else, you'll feel like, for another trader out there, you feel like this is a bearish momentum, the ladder. Why are you buying? But I believe it is based on time frame. Okay, I'm looking at the lower time frame. It is bullish, even if this is basically a mere retracement of this whole move here. I can still take longs. Okay, so digging down into the so we got an expansion, which always comes with an impulsive move, and it is full of imbalances. You don't know what an imbalance is? Well, I'll explain that in another video. Okay, so an expansion, then a consolidation. A consolidation is of this form: up down. In retail it is called a range. I believe we all know that. Now looking at this, there is a consolidation at every peak. At this higher high, there is a consolidation, and then a break of this consolidation. What I mean is, I mean is at this point here, okay, when the market breaks this consolidation, we should have a retracement downwards. Do you get what I mean? So at this point there's a consolidation and then a retracement into institutional price points. So what are institutional price points or institutional reference points? There are the other blocks, the fair value gaps, the mitigation blocks, and so on and so forth. I could explain what those terms mean, but to make this video very short, okay, we'll be having you have to pull through all that. So retracement and then another impulse which breaks a market structure. As soon as this impulse breaks the market structure, we seek for retracement into another block, a fair value gap, or a mitigation block, a breaker block. So at this point, we seek to enter at any of those institutional reference points. Okay, so moving on to EURUSD and how we caught a very nice trade on EU. We should have so basically this is a consolidation. Then we got something like an impulsive move. An impulsive move to the upside. And of course, you are aware this breaks the structure. To push this up a little bit. Yes, breaks the structure, and then we have the breaking market structure. As I said, we'll wait for a retracement into another block, a breaker block, a fair value gap, a mitigation block. Well, I anticipated a move into this other block right here. What do we have? We have, yep, to make this so you can see it clearly, make it white and feel. Okay, we have our other block right there. Now, looking at the whole structure of this market, we can see that we have several other blocks. The question is which one will hold. Actually, most of us don't know which one would hold, but we look to understand the structure of this market. When I mean structure, we're talking about micro and macro. Okay, we have this low here, we have this low here pictured. The smart money aims at manipulating and taking out liquidity at all these points. So I anticipated a break and a grab of this liquidity right here because orders are resting at this point. Sell stop, orders resting at this point. Okay, orders resting here. A lot of money being jumped around this area. So the market pierced, okay, and before this whole move happened right here, I looked to the left and I saw this fake value gap. I'm just going to annotate that with this. So we had a fake value gap here. And better if the market, if the smart money should tap into this liquidity and grab all this liquidity, they can as well fill this fair value gap. And look what happened. We had this entry, very nice entry, very nice entry. Okay, very nice entry. And at this point, I was like, yo, we got a good entry. Let's just break even. Okay, take partials at the previous breaking market structure. Yeah, so we had something like a 1 to 2 before break even. Okay, so at this point, the market came back, stopped us out, no loss. Remember, at break even, and look what happened. At this point, we left the market. We weren't interested anymore because we caught some good profit. So what happened here? Well, I can't say for sure, but according to the calendar, there was a news being released at this moment here, the core price index. And that was what accounted for the whole sweep and liquidity. Okay. Now moving on to USD CHF, we had a nice entry on USD CHF. Okay, yeah. We sent setups to the Telegram channel. So on USD CHF, a free channel. Look what we have. Excuse me. Okay. Yo. So I shared the setup with them, but the signal was on my premium channel. So I had this whole markup. Now moving on to the charts for a breakdown on yo. So what do we have here? What do we have here? Okay. Basically, I pictured USD on a bearish run on a lower time frame. Okay. So I was trading the retracement to this structure right here. Okay. Looking at this, you should expect uh, a break in this structure right here to confirm bearishness. Alright, that is how it should be. Wait for a break to confirm bearishness. But looking at this as well, we have retail trend line right here with a lot of pocket of money resting around below this trend line. Okay, so many pockets of money. Now I anticipated the smart money grabbing all this liquidity, taking out everyone who is going long and possibly reversing the whole thing. So basically, we could see levels, so many levels. I'm sorry about that. So many levels. Just so many. But which one would stand? I saw, I need to zoom in. I saw this fair value gap right here. If you don't know what a fair value gap is, it is just a volume in price where there's an imbalance between the buyers and the sellers. At this point, there's an imbalance. So I felt the market will come into this imbalance to fill the gap, or this one right here. The question is, which one do you use? I used this one, anticipating a fill of this one. So I'm going to annotate that using this, so you know that I'm referring to an imbalance with a value gap. So with this order block, there is an imbalance, and this imbalance broke this market structure right here. Now, I projected this out from the open of the last bearish candle outside. So look what we have here. 1 to 5.4 risk to reward. 1 to 5.4 risk to reward. And look how the market reacted at this point. This is one of the trades. One of so many trades we took last week, which were very, very successful. Come on, look at the reaction at this point. Digging into, I also shared this was the buy trade that we entered, and trying to get the other one. Okay, yeah. So I anticipated another move down. This was the after. I think I need to go to it before. Yes, this is it. Everything was covered live. So how did I anticipate this sell setup, which ended up becoming this? Or here's the CHF. Okay. What do we have here? We have a breaking market structure. Okay. So get this done. After you break market structure, we saw this impulsive down candles. Okay. And this is also another breaking market structure. Okay. Looking at this, we have what I would call a bearish order block. Okay, this is a bearish order block. It is basically the last up candle before the down move. Okay, so from this order block, there was a reaction. I'm just giving post analysis. There was a reaction. Okay, but that was not our point of interest. Okay, we're interested in this breaking market structure right here. All I say is, after the breaking market structure, I anticipated a retest, which retail traders would call it, into this structure right here. Now we have a fair value gap, and so annotate that. Okay. I'm sorry about that. Okay, we have the fair value gap, and basically it touch into this fair value gap to validate my entry. I placed the entry point at this point here, 0.91596, 0.596. But the market didn't really get into our entry point. The high of this candle, check here, check here. The high of this candle, 0.91581. Our entry was 596. It didn't tap into it. We have to be honest. But nothing went wrong. Everything stayed the same. Kept our heads cool. Okay. So till next time, stay safe and make more profit. Thank you.